Right now, the index is flatlined. It's actually struggling to regain lost ground from the October highs. And we're seeing that as the banks are still slipping down to lower prices. But some of the miners are actually pushing up to all-time highs right now. So that tells us that momentum opportunities are actually happening in smaller pockets on the market, which is actually confirmed by the momentum profile. That's telling us today that it's 17% harder than normal to find a good trade on the ASX. But here's the main part, the big kicker for this week. The launchpad predictability has actually moved up to its highest level in 18 months. And that's where we come to look for the expertise from Gary Glover. We want him to help us find where those momentum opportunities are hiding, but most importantly, on the launchpad, to help us surface where those next themes are coming from. Because history tells us that's where some of the best trades come from. There's a lot on your shoulders there. Good morning, Gary. How are you?
Yeah, it's funny you say that. Because I actually think the launchpad is showing some really interesting stuff here. And I don't want to get ahead of myself there, but I feel like there's a pocket here that potentially developing, and it could be a big opportunity ahead here potentially. But before we jump ahead, let's cover the those momentum names there, because we've still got critical minerals and obviously the copper are your two sort of strongest themes, which we discussed earlier there. So some of those stocks that we've looked at the last couple of weeks there is number 3 on the list is at HAV. I actually did trade this one, Chris. I thought this was a Kalamagi special. Had that real show of strength up into this little high there around the sort of just under 50 cents. And then the whole thing tightened up here and this little doji on the day. And then it come out of that range break there. I did actually bottle pass all of this. Just still a bit nervous about sort of some of the gold sort of plays, but yeah, a little bit of copper flavor there is probably helping this one as well. But it's had a pretty nice move there. But that's that classic play there, Chris. That's really the strongest names they got pretty hard, show that impulsive sort of move, that sort of sign of relative strength, and then you get the tightening pattern there. Just look at the volume in that, you get 4 or 5 days and you're just tightening up here. So that's, I don't know, I just sort of saw that. I just thought that's what, that's what Kalamagi would be trading. If you're looking for the strongest names, looking for them to tighten up and then come out here.
So it's them sitting up much ground in a very weak market, doing it on super tight volume, and it's part of what you call the 100% club, isn't it?
Yeah, that's exactly right. I mean, it's had that sort of show of strength already, and then pulled back in here and then popped again. But yeah, so yeah, I traded the entry well. I won't tell you that I traded the exit particularly well, but traded okay. I just didn't get because I'm a little nervous about the overall market. I'm just not trading heavily at the moment. I'm probably trading a little lighter than, and that's because I sort of feel like we're still in our moving average, the index is still below the 50-day moving average. And the index is actually below the 20-day moving average. Still, so that the Aussie market's actually in a pretty weak position, which is bizarre because even like if you go through the Aussie growth, it's down pretty hard. Whereas the US, although the growth names are down, or some of them are down, the actual index is pretty high. It's actually pretty tight. So it's funny, they're sort of our growth market's taken a pretty big hit in Australia here, but in the US, the indices actually, the Nasdaq's holding up pretty well. This SRL was one we spoke about last week, Chris, as well. Sort of, it was a little loose coming out of here. So again, you could have traded this really nice VCP. Although it did come back under the 50, the most important thing is that it did tighten up in here. So, I was talking to a few traders this week about some of the VCPs. There's a few VCPs out there. Some of them have been a bit loose. But if they start loose, you want them to tighten up. So you can still sort of trade them if they're a little loose to start with. But once they tighten up, then that's what you're looking for. But tricky to sort of buy that gap up. But you could have bought that with a sort of smaller parcel there. Well, then maybe it just stopped just under the 50-day moving average, something like that, which we spoke about last week. But it's had a nice move here. So still pretty strong here. It's still hanging tight there. think MRD was the other one there, which is in that. So this one's a little loose here. So it's had that show of strength, pull back. It's come back a little deeper than you'd like. That's probably the inherent nature of a small stock that's sort of, 8 to 9 cents and back to 2. But that probably pullback is probably too large there, Chris, as well. So that one probably I get a bit less excited about because it hasn't stayed in the top half. I know sort of you covered that in one of your videos, so I did get a chance to watch it. And I think it's really important to be sort of trading in the top half. I just think it's a really good rule of thumb for momentum traders there. I know like McLaren used to sort of say that if the stock pulled back and 80 basically come back a quarter of the range, that is the strongest names. That's the strongest position there. So, but it's more important that it sort of stays in the top half really on those sort of pullbacks there. So that's come back a little too deep.
Which is in contrast to the first one you showed us, which was HAV and really sitting fairly tight in that range.
Yeah, makes sense. You look how tight that is. Yeah,
27.48. Not quite the full top quarter, but it's top third.
Yeah, it's even just measuring that move there. So it's like 22 to 49 or something, 50 cents. So, you're looking 27-cent move there on it. What's sort of pullback there, sort of only 6 or 7 cents. So yeah, it's well and truly sort of staying in the top third here. So yeah, that's what you want to see. You want to see that strength, and you want to see it not give up too much of that. And you like that the tight price action. You just can't, that's what you want there, because then the beauty of it being tight, Chris, is that your risk parameters, and that's trading is all about. It's about keeping your risk contained. So you can contain your risk here, then you get an entry. I mean, all you're looking for it to come through that little high there. So you're looking for it to break above 43 cents, come out of this congestion there, and maybe it sort of stops in here, lower your day, or maybe a little bit wider here, 40 cents. So, you're buying this at, say, 43 and you say stops at 40 or 39 and a half, something like that. It's just keeping your risk fairly contained there. And then you can sort of get a bit of a scale in your size there as well. But, yeah, look, it was a nice trade for me. I say could have traded a bit better, but as I say, like I'm still a little bit cautious of the market there. So I'm not trying to overstay positions at the market. I just haven't sort of seen that sort of, your momentum score as well as telling us the market's not that hot at the moment. So, yeah, just playing a little more cautious than I normally would be. The NVA that's a bit of a loose VCP, that one, Chris. I know a couple of traders were looking at this. To me, it was a little loose for me, but even though the whole thing has tightened up, so yeah, good on others who have actually just getting on this little tight pattern here.
Yeah,
good
the volume was tight.
Yeah. Look, it's a good volume profile, but it's sort of gone up here, pretty strong volume. But there's a bit activity in there, but sometimes that activity comes in because the pullback has been so large. So then all of a sudden it starts accumulating again. So there was good profile here on the second leg. That's probably the best thing about it is this leg here. It's actually had some good volume up to that high there. And then this pulls back on definitely some lighter volume. Doesn't sort of so much go up here on a sort of heavy volume, but the key there is those 3 days down on lighter volume as well. So even though this rally's not much volume in there, what's more important is to see that volume dry up in the pullback there. But still a bit loose there. It's still sort of in this range here. So it's still one I'd be watching really closely, just because those looser patterns can be a little trickier. HCH was the last one there.
Hot chili. Good name. Good trade.
Yeah. So it's finishing now. I've noticed this quite a bit, Chris, there, where you sort of see a stock that's had the sort of a rally for, say it's sort of gone up for 5 or 6 months or even maybe 9 months. And then it has this ABC pullback and it undercuts the 50 quite a bit. So it shows that relative strength for a fairly sustained period. I think it has a pullback a little deep here. looking for the B wave there. There's no real low B wave. It's sort of really, I'm not sure if that's a good one or that, you're waiting for it to maybe get above the 50 again, maybe breaking some sort of swing high along here, but just doesn't give you an awesome entry. But I've noticed that these three waves pull back, or these stocks that show relative strength, sometimes these things can just go straight back up again. So that's almost like in Elliott wave terms, it's like your fourth wave, and then you get your fifth wave advance, and the fifth wave is really quick there. So how do you sort of program that, or how do you look for that? And that's a question I was actually discussing with a couple of traders there during the week, is that I just noticed this pattern quite a bit. There's a few stocks done this recently. But yeah, it's tricky.
What stands out to me on this chart here is just where you've highlighted breaking below the 50-day moving average for most of the month of November. The volume's fairly light. So if it's an ABC or a break of a 50-day moving average, normally we're highlighted to some component of it, like the triggers that we look at. How do you read the volume for the ABC or the break of the 50? If it's really light volume and it's breached the 50 or extending into the end of the C leg,
Yeah.
have a reading on that?
Yeah. I mean, so so you're right. That last leg down is not particularly heavy at all. That's quite light here. And then but you're sort of coming out here, not until this sort of first day here that we have a
clean
shelf.
eviction.
Yeah, that's the first sort of heavy day is a little bit more, so again, you're not getting that, we're all looking for a really low risk entry, try and maximize the trade. So I just, sort of work out, how do you actually look for this style of trade? Because it is something I've noticed quite a bit of, but it's just hard to trade that, we'd be fraught with risk. But plenty of stocks start to break down here and then keep rolling off as well. So I've just noticed that some of the stocks that have had that relative strength, really good volume profile, have the three-way pullback and then just go into fifth wave, take off. So apart from maybe drilling into like a half hourly, trying to find a B wave in there somewhere like that, maybe that's probably the only way. I mean, you'd want to sort of see this breaking above levels and stuff there. Yeah.
Volume. Yeah.
Yeah. And it doesn't, personally, you probably want to see it above the 50. So yeah, it's funny. Can I share an observation this week?
Yeah. Go for it.
I did a quick audit of my November trading. And so I had 16 tickers I traded last month, 7 winners, sort of 7 losers, and sort of 2 that were sort of kind of flat. Yeah, I think actually, sorry, I think one of those was a loss and one of them was sort of evens there. But I broke those trades down into 3 subsets. One was I traded above the 50. So basically looking for sort of stocks to build and then build above once they get above the 50 into those trades. The small subset was basically waiting for the market to pull back, come back and retest the 50. And then the third subset was trading below the 50. 7 out of 7 below the 50 losers.
Wow.
The 2 that actually come back and hit the 50 losers. The 7 that basically built below and went above the 50, 7 for 7 winners.
Wow.
What is that telling me in my trading, Chris?
Something about the 50-day moving average, Gary. I think it might be important.
Yeah. So, I mean, my winners ended up being, I had more losers than winners, but, and I was like the mailroom boy. I was just like paper cut on my, trying to establish some of those under the 50. I was just getting paper cut, but the 7 winners were all greater than 3 for 1 risk reward. So they're all bigger winners. But just like a highlight, I mean, gee, there's no sort of argument in that. The data is just absolutely just clean. I mean, look, it's only 1 month. I just wanted to review the whole November trade, but gee, it was pretty compelling, telling me what I should be doing, how I should be training. So.
Well, without getting into the depth of too much statistical analysis, you and I often talk about the 50-day moving average. When we trade above it, we're about 2.5 times more likely to get a successful trade out of it, or a 10% gain in the month, than if we trade below it. And what you're talking about there, just for the month of November, sort of a microcosm that is actually extra layers that I've put into that research. And when we look at regimes as in sort of a good market, a strong market, an ultra strong market, or a weak market, obviously we're in a weak market, the probabilities shift dramatically, and trading above the 50-day moving average becomes even more critical for success in those weaker markets, which your numbers just highlight. So I know I go into too much depth, and I love statistical analysis, but that's a great finding. That's a key finding. Anyone watching should really take light of that. Go back, review their own November trades, and have a look at the 50 days. Let us know how that goes, because I think you won't be alone, Gary. I think there'll be a lot of other people who are in that same boat.
Yeah, it just kind of told me like my win-loss ratio is kind of low, so I've sort of got a lot of losers there. But if I was able to just stay above the 50 in terms of looking for entry levels, then my win ratio should be a lot higher. But my risk to reward ratio, sort of in terms of what I was winning, was my losses versus my wins. I only had one maximum loss, or one sort of what I call 1% loss, which was sort of something which wasn't really my fault. Actually, went through the stop and it didn't get activated, which happens sometimes brokers. But most of the others were pretty, it was just heaps of paper cuts, just heaps of tiny sort of losses there. And 3 really good wins. 7 good winners in there. So even though it sort of makes up, maybe only, 7 from 16 or something like that. So maybe 40% winners, but win ratio is pretty high, or the profit ratio is pretty high compared to losers there. But just to top it, I just got to get rid of state. Just like there wasn't like it was 7. It just told me.
Yeah. So those wondering, 40%. So those newer to momentum trading, 40% win-loss ratio. That's actually pretty normal for momentum trading. Those trading north of 50 do really well. And before we progress into the launch pad, I want to put a question to members as well. I mean, you and I, Gary, we don't have that much experience trading with smaller caps. This one's above 50 cents. But if any viewers actually have some insight into how to trade that ABC, trading below the 50-day, that setup that you just described in HCH, please comment below, because we'd love to learn if they've got insights on it, because there are some really good traders who follow. So we'll throw that question out there.
Yeah, it is tricky to trade that sort of. I mean, you do see that classic fifth wave and stuff there. So if you go back to 07, I remember the 07 top, which was another commodity sort of boom at the time there. BHP and Rio, I think Woodside as well, had that classic 3-wave pullback, and then the 5th wave just went bang.
Insane. Rio's was a phenomenal. Rio, yeah.
And it was a really low volume rally too. Like a lot of those things, sometimes they can be quite low. And this one here that's not a low volume rally. That's actually quite a healthy rally in here, and pretty strong volume. Whereas I think if you look at that 5th wave for BHP and Rio in 07, that was a really low volume. So there's no participation in it and drove it to a new high. But yeah, trying to catch that last.
Trading it at the time, you try to put an order in, and the limits were too far at the time we were using E-Trade. And it was sort of, they were gapping up 50 cents, $2 at a time, and you couldn't manually adjust your orders. And when you manually adjust them to what the offer was, by the time you punched it in, it had gapped up again, and you couldn't get a fill because we didn't have many $150 companies on the ASX at the time, and the limits the brokers had on us, we couldn't enter orders that far. Just
anyway, and when BHP was 50 and Rio was $100, every broker in town had to buy. University, so every broker had to buy it, so no one had to sell on that sector, and pretty much every broker would tell you have to have those stocks in your portfolio.
BHP was like 12.5% of the index at the time, and they did a off-market buyback. That's a whole nother story about when they buy back and then raise capital. We're digressing. Let's have a look at the Launchpad. This is where we want to look at your expertise, because you've been following this for years, and throughout the years, when you've identified the next market-leading themes, so often you've actually identified them weeks before on the Launchpad, and you've said, look, there's a lot of uranium, a lot of property, whatever it is, and the indicators for how predictable the Launchpad predictability is really just blown out massively. Those who have the Momentum Profile membership can see that. It's just massively gone up. So I'm kind of leaning on you and saying, well, what are you seeing as a thematic in this group of companies for the Launchpad?
Yeah, I mean, I guess we're still seeing some of the gold and silver names in there, not just a few of them there. Like, it feels like the momentum's definitely slowed down some of those, but definitely the copper theme is pretty strong. And definitely some of the energy names starting to sort of permeate through as well. So I just sort of felt probably copper and the energy were probably the big ones there. So I think that HCH there, hot chili, which is
Iron in a couple of different fires for the commodities, right?
yeah. So that's been pretty strong here as well. So that's had that pretty strong move. They're pretty big volume there. So
So that's on the momentum and the launch pad, HCH.
yeah, so that's pretty strong there. The CRM, I know Coronado's sort of coal there, but I think there is some sort of copper theme in there as well or something. But that's interesting there because that's had a pretty nice bounce off of that low there. Again, that sort of maybe kind of a bit of an ABC back, bit of a square sort of correction there. Looks probably more promising on the weekly. We just sort of had a bit of a rally here, pretty big volumes down here, and then gone sideways there. Interesting if this just sort of starts to build here. It's just the negative is the overhead, Chris. There's a lot of overhead there, so a lot of losers to sort of to work through. And it probably when there's a lot of overhead, you find that when they can run up here, but then when they pull back, they always pull back a bit deeper. So
Heavier drops.
yeah, so that's the risk for those. I think ALK was sort of in that list as well. Copper, gold and copper exposure there, sort of tightening up here. Yes, it's probably still worth watching here. This one, and what was the last one there? CYM, probably a little small here, a bit loose as well, but did have that sort of three-way pullback, kind of almost like an undercut there, and started to move here. So, yeah, I thought that was sort of interesting. I think the other ones that I in that energy space there, apart from Coronado, PEN, which is in that, I think it's in that uranium space as well. That's had yeah, so that's sort of, but it's had a strong rally out of the low. It's pulled back there, maybe just below the 50% level, but the whole thing has sort of tightened up in here. And then you've got a little B wave break in here, then come through there. So it's interesting here.
Could that be one of the AVC pullbacks below the 50-day moving average? That
yeah, can be there. The volume does drop a little bit there. Just, but normally the only shortcoming there, Chris, is that hasn't been running particularly long. I like to sort of see those probably 6 or 9 months have that, 3-way, and then that's probably the better setup there. Like I noticed we're talking about Coronado there, the SMR, the other coal play there was a nice cup and handle there actually, which it broke through during the week. So we are seeing some of the energy names, I think even Whitehaven as well, that's gone to a near high as well, Chris. So seeing some of those different energy sectors there. So obviously we're seeing gold and then copper run here, critical minerals run, but the probably energy sectors kind of been floundering really. And if you study those high inflationary periods of the past, precious metals, so gold and silver, and the energy names are usually the strongest sectors. So energy is definitely a sector to be keeping a close eye on here, because we know inflationary periods, when inflation is a little bit higher, there you can get big moves in those. So the coal names are looking pretty strong here. I mean, Woodside's had that retest to the high here. Maybe this is setting up a little bit of a handle. We don't know there. Santos has just sort of broken above the 50 here on the recent days. So on that list, I noticed there was a few uranium names sort of sneaking through there, but I just thought it was pretty interesting there. If you look at, I think it was Deep Yellow, they sort of pulled back here. They're under the 50 again, but we are starting to break a few B waves here, starting to sort of tighten up and then come through. It's still under the 50, so I've still got a bit of work to do, I think.
we know what happens when you trade under the 50.
Yeah. So Paladin now sort of, it's had that classic 3-way pullback we talked about. And the whole thing has tightened up in here as well. And we are breaking through the B waves and 50s there. So it's definitely a sector to keep an eye on there. I think Barnum as well sort of had a look a little, that whole thing tightened up in here as well. So just feel like that energy sector as a whole complex is pretty interesting there because we're seeing quite a few of the players actually, but remain pretty strong. So I thought it was interesting there that a couple of those made the list here this week. So yeah, that's probably something to keep an eye on there.
Nice. Well, there's some really good insights. And for those of you who are members and put in the requests, we'll put the video up in a second about the members' requests. And those of you who want to learn more about charting and finding more from charts, there's a whole playlist of charting iron examples of how to improve the charting. And so thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.